Intel down 9% after hours on an earnings beat, a very good earnings beat. What the heck happened with the market? Got slammed by a ton of bricks. Well, let's take a look at Intel and apply it to the market. So Intel, massive company, massive revenue, solid product, known it's going to be around for a long time. All technology pretty much uses chips. And they posted better than expected revenue numbers, but the stock sold off. Well, they posted worse than expected guidance for the third quarter. And we've got pretty high valuations that are the result of optimism about spending and all of that and companies' revenues and earnings. But that optimism has kind of been baked in and has been momentum left from around March. And we've kind of just continued with that momentum. But the situation has gotten worse. You know, some states are going into a second lockdown. It's no longer a V, it's more of a W. So, you know, companies are pulling back their expectations. People are staying inside. And there's going to be a mispricing of the valuations, it looks like. You know, we've seen this disparity between the NASDAQ and the Dow. But today, that disparity wasn't the case. You know, it's been a seesaw. The Dow's leading, the NASDAQ's leading. The S&P 500 was leading. And there is still a rotation that's occurring, but it's the fundamental rotation between the NASDAQ and the Dow, but it's not necessarily them individually, although the NASDAQ was lower today. They were all down. S&P was the least down. But it's the trend into value, right? So megacap tech, which heavily weights the S&P 500, was down about 4% today, if you look at all the companies in megacap tech. And they overweight the S&P 500. But there's a lot of companies that are economically sensitive, so sensitive to the downside of the economy, that did very well today. GM, Ford, some of the banks, Capital One. So, and Capital One's highly exposed to people with credit cards and all that. So it looks like it's not a massive crash that's pending, even though that's, you know, I reacted that way. I sold a lot of positions. I did that mostly yesterday when I moved a lot of my cash into gold and silver. But, you know, today it's showing the signs of more selling. I'm not saying that there's not going to be more selling. What I'm saying is it's not a massive, 30%, oh, wow, we overshot, what's going to happen, all that. It's somewhere in the middle. So it's more of like, okay, we got to sell some things that have just continued to go up. I'm sure this trend is going to kind of continue until Apple earnings, which are probably going to disappoint, or at least the guidance is going to disappoint. The stock's going to sell off. So, we'll see. Hopefully, maybe, possibly this takes fruition. But, we'll see if this takes fruition. So I can't say a whole lot more than that. I feel like you've got the gist. I've rotated heavily into gold and silver. That's an inflation play. I think inflation might also help the stock market. So we just got to kind of see things come to fruition. So another day of that, and until tomorrow, peace.